Alright guys, welcome to my channel. This is CJ Profit FX. You're welcome. Please, if this is your first time coming to my channel, do well to subscribe, click the plus sign and turn on notification bell so you can get videos like this on my channel. Okay, today I want us to discuss the logic behind demand and supply zone. Some traders, most especially newbies, are finding it so difficult to understand the little logic behind the demand and supply zone. But here you have me. I will take you step by step on how to understand everything that has to do with demand and supply. Remember, this is the simplest strategy that most traders are using, most especially the newbies, both the chart pattern traders and the advanced traders. Okay, you guys know what is demand, you know what is supply. A demand zone is a zone or a price point in which institutional traders and retail traders are making their buyers. They are trying to buy at that particular zone. So you notice any particular price point in which people find favor, much liquidity is being imparted in that particular zone. Applicable to supply zone. When we talk about the supply zone is that particular zone in which traders want to sell off the assets, or in which forex traders or crypto traders want to take profit. And for you to know this as a technical analyst, you should notice it by the reversal. It's just like, let me just use this simplest example. Let's use the demand zone as a floor, and let's use the supply zone as a ceiling. You notice if you are playing a ball, once you bounce the ball on the floor, it's going directly to the ceiling. And let's say it hit the ceiling, where is it going? It's going down to the floor. That's how it is being demonstrated if you're a technical analyst. Now, but the simple logic behind this particular demand and supply are these zones are area in which people are making demand and people are supplying. I want to use a gadget for example. Let's say you are a type you want to buy this laptop and you move to a plaza where they are selling laptop. You notice if you want to buy a laptop, let's say the floor price of laptop is 100k or $100. All of a sudden, many demands start coming on this particular laptop. Everybody's trying to buy laptop, many demands. You as a trader, you notice that when people are trying to buy the laptop, they are bringing in the money. Okay, let's apply the logic. This is a local market, and the seller decided to increase the price of this laptop. What do you think is going to happen? Because there is a high demand, the price of this laptop is going to increase. So that's why you normally see when traders are making this at the demand zone, the price will start increasing. It starts increasing. You guys know the logic or the law of demand and supply. When there's a much demand, there's an increase in price. And when there's a much in supply, there's decrease in price. So at that point, the price of this laptop starts increasing from $100 to $200, from $200 to $250, $300, $400. Let's assume this supply zone is $500. Let's say the zone is $500. And once it got to this particular zone, there is no demand. We have low demand. And let's say, for instance, the seller have bring more deals or more system or more laptop into the market and nobody is demanding for it. What do you think is going to happen? He or she going to reduce the price of the laptop so that it can attract customers. So that's my little logic. So in technical aspect of it, let's illustrate it with using the chart. Now let's say the market is ranging somehow like this. That's when you should have the logic that people have started accumulating. Many people are buying. Many people are buying. And all of a sudden you see a push up like this. What is it telling you? There's an increase in the price of this asset you are trading. And market might be moving like this because market is always up and down. It will be moving in this direction. And let's say it hits the supply zone and low demand comes in. you notice that the price will start to decline to attract customers. So repeatedly the market will be moving like this. Remember, candlestick tells us a story of how the buyers and the sellers reacted in the market. So this is where we will now find a strategy of following the trend. So if you're a technical analyst, you always notice that when the market is moving from a demand, you should buy and target the supply zone. And once say the market got to the supply zone, you can make a sell decision. You can anticipate the market should sell to the downside again since it's a repeated action. And you take your SL like this, your TP to the downside. Once the market moves to your direction like this, you've made money in the market. So for you to trade resistance and supply and demand, you need to mark out those areas that are equal in price. That's the turning point of the market. Okay, let's quickly rush to the chart to know if you can see example of this. Okay, and the quality of a good demand zone is when they have multiple reaction. The same to the resistance to the supply zone. When there is a multiple reaction in any zone, it's a resistance or a support or a demand zone. Okay, let me go to a lower time frame to know if I can get this. Okay, you guys notice when I said we identify our demand zone and support and the supply zone with their reaction. When there is a multiple reaction, let's say this area will have this protected high, and if you should drag my trend line or my rectangle tool, you notice we have about 3 reactions in this particular zone. We have this first, we'll have the second reaction, then we'll have the third reaction. The same thing at the demand zone. At this demand zone, we'll have a place like this. We'll have a place like this. This place is a zone whereby people demanded to buy this particular asset. And for you to identify a good demand, I said it must have a multiple reaction. Okay, just a multiple reaction like this. So let's say for instance you're a trader and you spotted this particular setup. When this market reacted here, you can try to buy somewhere. Your your stop loss go below, you target the next liquidity area. The same thing applies to the downside, to the upside. Assuming you targeted this area to short the market, set your SL, your TP to the downside. That's the simple logic, and you maintain it like this as repeatedly the market will be monitoring it. Then in a case whereby the market decided to disrespect this zone, let me just use this example. Let's say this market move like this and flip this resistance like this. You wait for the retracement where the market will blah 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 come back and then continue. But you wait for a good confirmation before you do this. Okay, but let's just maintain this particular tutorial. Maybe I'll drop another tutorial on how you can spot a breakout from any demand and supply zone. So thank you guys. I remain your coach CJ Profit FX. Turn on your notification bell so you can get in videos like this, and make sure you're following me. Turn up, subscribe, and then watch yourself grow in your financial journey. Thank you guys. Peace and love.